Hi everyone, it's Dr. Marks, and our topic for today is accounting versus economic cost. We're going to be moving on to talk about accounting versus economic profit as well, but for this lecture, we're just focusing on the cost side. We have to begin by asking, what are explicit costs? Well, explicit costs are when money literally changes hands. So you're paying a bill, you're giving money to somebody. For example, you pay your workers a salary, or you pay rent on your factory. Maybe you're paying for raw materials that you've purchased. You're paying your insurance bill. Do we agree? All of these are where money changes hands. So these are all examples of explicit costs. Explicit costs are generally the costs that your accountants care about, right? Your accountant's going to be posting to the general ledger, doing those kinds of things and trying to get a sense of how well your firm's doing. So the explicit costs, tracking them helps your accountant determine your firm's profitability, right? So when you're working with your accountant, you would want to report all of the explicit costs to him. We then have to talk about what economists call implicit costs. So we have explicit costs and we have implicit costs. Our implicit costs are our opportunity costs. And remember, we've been talking in economics that all decisions have an opportunity cost. Well, your opportunity cost in this case is going to be the very next best option, that thing that you could have done. So perhaps you would have been in a different line of work. Well, that very next best option, that's your opportunity cost. Perhaps your company would make a different product. So maybe instead of making widgets, you would have made something else. That very next best option, again, your opportunity cost. Do we agree that in these examples, money's not changing hands, right? I'm simply thinking about what I could have been doing, what my next best option would be, but I'm not paying a bill. So understand that these are implicit, but they're not explicit costs because money's not changing hands. But we want to remember that implicit costs still matter. So we've got implicit and we've got explicit costs. Your accountant's not primarily concerned about your implicit costs, right? They're probably not things that affects your tax return, and they don't have to post them to your general ledger and your bookkeeping. But it's important that we understand our implicit costs, right? Think about why we need to understand our implicit costs. Knowing our implicit costs helps us to make good economic decisions. So while your accountant's not that concerned with your implicit costs, you should be concerned with your implicit costs because you can't make good decisions without thinking about implicit costs. Let's use attending college as an example. There are both explicit and implicit costs of going to college. Well, your explicit costs are probably what we focus on all the time, and these are going to include things like your tuition and your dorm room expenses. Of course, you've got books that can be several hundreds of dollars. Do you agree that all of these are explicit costs because money is changing hands? But you also have an implicit cost. Your implicit cost is your opportunity cost. And we all agree that we have an opportunity cost when we go to college. We do give something up. Most likely, you would be working instead if you didn't go to college, right? So if you would be working instead, you have an opportunity cost. So your implicit cost would be measured as the foregone salary you would make if not in college. Okay, so again, we're looking at college. We agree there are explicit costs, tuition, dorm room, books, and there's an implicit cost, what you would have made in whatever job you would have had if you had worked instead of going to college. So look at these quantitatively. On the left, I've got the explicit costs. I'm just making these up. Tuition, let's say, is $15,000. Room and board, $4,000. Books, $1,000. So let's say explicit cost of going to college is $20,000. But then we have to also think about implicit costs. So let's say I give up the opportunity to work and I would have made $10 an hour So $10 an hour multiplied by 2080 hours in a work year comes to $21,800 a year. So if I've given up a job that would have paid me $10 an hour, then I have an implicit cost of $21,800. All right, so we agree we have an explicit cost and we have an implicit cost of going to college. Now let's take a look at two different ways of thinking about costs. We can think about accounting costs. Let's do that first. So when we think about accounting costs, we only think about explicit costs. Again, these are the kinds of things your accountant might care about. And do we agree that the accounting cost of attending college here is $20,000 based on my numbers, which probably aren't accurate? So if I were to ask you about the accounting costs, you would tell me $20,000 because all we do is add up the explicit costs. So what this would tell me is that if I want to send my kid to college, I have to save $20,000 to pay those bills. Again, those are the kinds of things your accountant cares about. He's advising you on how much you might be putting away so that you can make sure you can cover the cost of college. So your accountant cares about explicit costs. And again, why? This is going to help him advise your family. How much do you need to save versus how many children do you have that might go to college? Well, I've got 2. So my accountant can probably say, okay, you need to save X number of dollars. But as we've already argued, implicit costs are relevant to you too. While your accountant might not care that much about them, you can't make a good decision about going to college if you don't think about what is foregone, right? So in the back of your mind somewhere, you said, okay, if I go to college, I give up work for 4 years, and you decided that was a reasonable trade-off. But in the back of your mind, you should be thinking, hey, I've given up a lot of money to be here at college. So let's look at a second way of capturing cost, and this is called economic cost. Economists look at economic cost. Well, economic cost is going to be calculated a little differently than accounting cost. So economic cost is going to be the sum of both the explicit costs and the implicit costs. So we'd have to add both together. So if I wanted to calculate the economic cost of going to college, we would take $20,000, which is our explicit cost, and add in $21,800, which is our implicit cost, and now we have a total of $41,800. So the economic cost of going to college is $41,800. But let's remind ourselves, the accounting cost of going to college we calculated as $20,000. So everyone see that we're going to get a very different number, assuming that our opportunity cost is sizable. So economic cost of attending college, $41,800. Accounting cost, $20,000. So let's quickly recap. As we've said, accounting cost captures only our explicit cost, whereas economic cost captures both our explicit and our implicit costs. We've argued that your accountant probably cares about your explicit costs. That's probably really what he's going to focus on. But good decision making requires that we also think about implicit costs. For example, how can I decide if it's a good idea to go to college unless I think about what I give up? This is why there's 2 ways to look at costs, and both are important. Let's move on to ask the question, which of these 2 costs is going to be bigger? So is it accounting cost or is it economic cost? Hopefully it's clear to you that economic cost is greater than the accounting cost. Well, if we look at the equations, this becomes very transparent. Again, accounting cost looks at only explicit costs, whereas economic cost starts with explicit costs and then adds in implicit costs. So if you just look at these equations, it's very clear that we're going to have economic costs be bigger than accounting costs. And as we just illustrated, the economic cost of attending college turned out to be greater than the accounting cost. Well, let's look at that one more time. So let's go back to what we've calculated. We said that the economic cost of attending college was $41,800 because we had to add both explicit and implicit costs together. We determined that the accounting cost of attending college was $20,000 because it's just the explicit cost. So do we agree the economic cost is bigger than the accounting cost of attending college? We can also look at this another way by writing economic cost in another manner. Let's remember again, accounting cost equals explicit cost, and economic cost equals explicit cost plus implicit cost. So by now you understand these equations. Well, let's substitute the first equation into the second equation. In other words, let's start with the second equation. And do you see what I've done? I've taken this first equation for accounting cost and I've plugged it in right there. So economic cost equals accounting cost plus implicit cost. All I've done is substituted in for the explicit cost because I know that's going to be equal to accounting cost. So this really makes it transparent. Economic cost starts with accounting cost and then it adds in the implicit or opportunity cost. So isn't it clear then that economic cost has to be bigger than the accounting cost? Now, is it possible that these two costs could be equal? In other words, could economic cost ever equal accounting cost? Well, let's use the equations to help us answer that. Again, here's our two equations. Accounting cost equals explicit cost, and economic cost equals explicit cost plus implicit cost. What would have to be true for them to be equal? Well, for them to be equal, do you agree that we'd have to have an implicit cost of 0? If our implicit costs were 0, then the two equations would be equal. We'd get the same calculation. But let's think about what that means. What does it mean to have an implicit cost that's equal to 0? Well, it means no opportunity costs. Well, let's think about what we've learned in economics. Do we have situations where we have no opportunity cost? No. So think about what we've learned. There's no such thing as a free lunch. There's always a cost, and at minimum, there's always an opportunity cost. So let me ask the question again. Could accounting costs be equal to economic costs? Well, only if implicit cost is equal to 0, but that means we have no opportunity cost, and we know that violates the basic principles of economics, right? So, can they ever be equal? The answer is no. Let's recap. We've just explained that explicit and implicit costs are different, where explicit costs capture situations where money changes hands. So we talked about paying a bill, paying your rent, buying raw materials, paying your workers. Explicit costs are an actual expense that's realized. I write it into my general ledger, I use it to determine my profits, etc. Implicit costs are our opportunity costs. And as we've learned in economics, every decision has an opportunity cost. Now, your accountant cares about explicit costs for the most part, right? Because you've hired him to figure out what is your total cost level, how much profit did you make. Opportunity cost really isn't relevant for that role. But as we've argued, good decision making requires thinking about your implicit costs, your opportunity costs. You can't make good decisions without knowing what you gave up. So let's think about going to college, folks. You have both an explicit cost and an implicit cost. Your actual economic cost of going to college is far higher than the tuition, fees, and books that you pay for. Remember that as you make decisions that affect your academic process and your progress. You've given up quite a lot to be at this university. Some is direct expenditures on tuition, but you've also given up a pretty big opportunity cost. Remember that accounting costs capture only explicit costs. Your economic costs capture both your explicit and implicit costs. And that means that our economic costs are going to be greater than our accounting costs. We've argued that they'll never be equal. For them to be equal, implicit costs would have to be zero, or opportunity costs would have to be zero. And that violates our principle, no such thing as a free lunch, right? There's always an opportunity cost. It might not be a very, very big one, right? Most of us came to college because we didn't think our opportunity cost was all that big. But I know some of you gave up some lucrative jobs to come to college. Your opportunity cost was really big, but we always have one. Guys, let me know if you have any questions at all on this content. Thanks for listening. I hope you have a fantastic day.